In today's video, we're going to be going over exactly how to buy your first rental property step by step. In today's video, we're going to be discussing exactly how to buy your first rental property step by step. If this is your first time here to the channel, first of all, welcome. This is the Gotham Investing Show, where we're going to be talking all things related to real estate, investing, entrepreneurship, and personal finance. My name is Preston, and we own a portfolio of 50 plus rental units. We do flips, we do wholesales, and we also own an assisted living facility. Our mission for this channel is to provide as much value to you as possible so that you can achieve financial freedom as well. If you want to achieve financial freedom, make sure that you're subscribed and you like this video. Also, make sure that you follow us on our socials. We're active there daily. Now, this video is going to be good for beginners, but there's a lot of tips and tricks that I'm going to show you that will be good for anyone at any level. Now, there are a lot of aspects of real estate investing. In today's video, we're going to be focusing on buy and hold properties. Trust me when I say this, I know that this process can be intimidating, but this is the exact reason why we created this video, to show you step by step exactly how to go about this process. You can have all the knowledge in the world, but if you're not going to take action after you watch this video, then there's no point in learning all this. There are things that you can implement right away after you watch this video. We're going to be talking about the advantages of real estate investing in another episode, so make sure that you're subscribed. In this video, we're going to be focusing on house hacking. This is exactly what I did to get started in real estate investing and what I recommend to people that are new get started as well. Make sure that you stay till the end, because what happens after you purchase the property is going to make or break your investment. It's also super important to understand each step, so make sure that you go through this entire video before you go out and try to buy your first property. So number one, the preparation phase. The first thing that you need to do to prepare is get your credit score up, or actually just start to build credit. If you want to take out a loan to buy a car or a home, this is just the game that you have to play. It doesn't matter how old you are, you can start building your credit right now. It's going to determine the interest rate that you're going to get. The higher the score, the better. You should be aiming for a credit score of 740 plus in order to get the best terms possible. Lenders will take a look at your FICO score in order to determine if you can qualify for a loan. So here's how the FICO score breaks down. 35% is determined by your payment history, 30% is credit utilization, 15% is your length of credit history, 10% is your credit mix, and 10% is determined by your new credit. Obviously, payment history is going to determine 1/3 of your FICO score, so make sure that you're prioritizing that first. Now, this doesn't mean that you should ignore the other factors. This is just the most important. Now, if you're younger than 18 years old, one thing that you can do right now to start building your credit is asking your parents if you can become an authorized user on one of their credit cards. This is actually what I did to start building my credit score. Now, one important thing to note, never put anything on your credit card that you can't afford to pay off within a month. So this is a big pro tip. Instead of using your debit card when you go buy food or fill up gas, use your credit card whenever possible and make sure that you're paying it off right away. Number two, let's talk about money. You will need to have at least 3.5% to 5% of the purchase price of the home that you're looking to buy. So let's say you're purchasing a duplex that's worth $200,000. You're gonna need to have at least $10,000 saved up. But this doesn't include closing costs. But this is also another pro tip. You can usually have the seller contribute towards the closing costs if you negotiate that. Also, make sure that you have at least 6 months of reserves for your property that you're setting aside. So that means your mortgage, your taxes, insurance, and any maintenance that might come up for your property, you're setting that aside. Number three, the pre-approval process. You're gonna wanna start reaching out to loan officers in your area to qualify for a loan. You can get referrals to your friends and family, and make sure that you vet and find a good loan officer that's gonna help work with you and someone that's readily available. In order to qualify for a loan, you need to have a W-2 or be employed currently. If you're self-employed, you're gonna need to provide at least 2 years worth of tax returns. The loan officers will work with you to determine what your income needs to be and what you can qualify for as far as the purchase price goes of the property. Loan officers are like real estate agents. They don't get paid until the property closes. Make sure that you lean on them and ask any questions that come up. You will need to have a debt to income ratio, or DTI, of less than 50%. As an example, if you make $5,000 per month, your debt can't be more than $2,500 per month. So something cool that a lot of people don't know is that if you're looking to buy a 2 to 4 unit property, you're able to use up to 75% of the income in the units that you're not living in towards qualifying for that actual property. This is also super important. If you're looking to buy a house this year, have your loan officer review your tax returns before you actually file them to the state. Number 4, actually finding the property. Now, it goes without saying that you need to make sure that you build a good foundation and that you're analyzing properties consistently before you go out and buy a property. One thing that you can do obviously is to watch our videos. We're gonna be providing a ton of free information for you guys, so make sure that you're subscribed. Now, here are a couple of general rules of thumb that you can follow when you're looking for a property. The first thing is the 1% rule. So this means when you're looking for properties, you wanna look for the monthly income to be 1% of the purchase price. Now, these deals aren't everywhere, and it's gonna take some time in order to find these deals, but that's the parameter that you wanna be looking for. All right, let's use that $200,000 duplex example. Now, fill out all these numbers. You can take a screenshot or pause the video here. Make sure that you fill everything out, and then you run the numbers. As you can see in this example, we're looking at a 17% cash on cash return. I typically look for anything above 12% to be a good deal. That CDS calculator is completely free to use. I'll link it in the description below. Now, there are a lot of ways to find rental properties. If this is your first time looking for a rental property, we recommend using an investor-friendly real estate agent and ask them who does the most volume of real estate in the office. Also, find an agent that helps their clients find rental properties. After you interview each agent, make sure that you pick the one that you connect with the most. Number 5, making the offer. It's going to take multiple offers before you find the property. In today's landscape, it's become much more competitive to get good deals. But don't worry, as long as you're putting in offers consistently, you're gonna be able to find a deal eventually. Refer back to the CDS calculator to ensure that you're running your numbers properly. There are plenty of properties out there that are currently undervalued, or the previous owner hasn't raised rents to the market level. In today's market, it's become much more competitive, so if you find a good deal, don't put in a super lowball offer. You'd be surprised at how many owners will get upset and won't even counter that offer that you made. And this is also super important. Make sure that you put in offers contingent upon inspection. Once the inspector goes out, they're gonna find anything that needs to be addressed. Now, a lot of the time, the seller will actually give you back credits at closing if they find something major that needs to be repaired. Try not to ask for every little thing to be addressed, just the major repairs. The inspection also protects you from buying a property that has any major issues that could potentially ruin the deal. Number 6, closing. So once you're under contract, usually your real estate agent or your loan officer will have a title company that they recommend that you can work with. Now, when you get your closing disclosures back, make sure that you double or even triple check all the numbers to ensure that they're correct. Also, make sure that you're getting back the rents and deposits from the current seller. This might be prorated depending on when you close. So those are the major steps that you need to take in order to buy your first rental property. But like I said at the beginning, post-close is going to be the most important step in this entire process, which could either make or break your deal. After you close on the property, you need to decide if you're gonna hire out a property manager or if you're gonna manage the property yourself. I recommend managing the property yourself so you can understand the process of managing your own tenants. This will also help you later on vet what a good property manager looks like. Now, before you go out and manage a property yourself, a book I recommend before you start managing your own properties is the book called Managing Your Rental Properties by Heather and Brandon Turner. I'll have the link in the description. Also, we get asked a lot if an LLC is necessary in order to invest in real estate. The short answer is no, but it's good to eventually get one to protect from your personal assets. You can buy it in your personal name and then deed it into an LLC with your title company or a real estate attorney. Now, if you've made it this far in the video, it goes to show that you're serious about taking your financial future into your hands. We hope that this video has been helpful to take you step by step on exactly what you need to do to buy your first rental property. I know this was a lot of information that we threw at you, so feel free to refer back to this video at any step that you might have questions on. Again, our goal is to help you achieve financial freedom, so if you enjoy this video or if you found it helpful, make sure that you like the video and that you're subscribed to the channel. Thanks guys, and we'll see you next time.